Welcome back to Strongman Personal Finance, everybody. We have a very serious topic to cover. We're going to compare QQQ ETF to VT, the Vanguard Total World Stock Market Index ETF. Now, I did a live stream earlier talking about BuzzFeed, and there was this guy named Cody, my Brody, and he gave me some super chats. And I love super chats. I love when money gets deposited into my bank. Oh, it's so delicious. Well, apparently after the stream closed, the guy gave me like an $80 super chat. I guess that A means Australia, or I don't know, maybe that's like the Zimbabwean dollars. But he wanted me to talk about the differences between the NASDAQ 100 versus VT my ET. And very simply, it's all based on what kind of investor you are. Are you an investor that believes that you cannot pick stocks? Do you believe your time is better suited focusing on growing your income instead of sitting there and making active decisions about your investing future? Do you actively choose stocks, or do you believe in the efficient market hypothesis, which says that stocks reflect all known information? If you believe in that, in the efficient market hypothesis, you should just buy a global index fund. If you're a stock picker and you think you're smarter than the world, than the market, because you know something that everybody else doesn't, which means you probably just filtered on past performance, well, then guess what? You're not really an index fund investor. VT is the ultimate index. Why? Because it is market cap weighted. Active management, you're sitting there and you're choosing whether you want to overweight something based in comparison to its actual true value relative to the rest of the global market. If you sit there and say, I'm going to buy this stock, I'm going to put this stock as 5% of my portfolio when it's only 2% of the global market capitalization, you are overweighting that stock. You are making an active choice. You are saying that stock is over or undervalued or whatever, or the market is missing something about this stock that's going to give me excess performance. But if you buy the stock and you keep it at 2% of your portfolio and it's 2% of the global market cap, you're buying the stock at exactly where you think it should be. Does that make sense? So any other index besides VT is an active choice. You are actively choosing to invest in one country or one market or one specific subset of a market. If you buy VT, you are investing in the entire world, at the investable world, at market cap weights. That's it. That's the comparison. Let's go look at these indices, okay? And I'm going to shoot down some, I don't know why I have these BuzzFeed things open. BuzzFeed! So I did a head-to-head comparison of QQQ versus VT. Now, I say this every video. The geniuses on YouTube, they open an ETF database and they filter on past performance. And guess what they choose to buy? Large cap US tech. Any ETF that had a lot of representation in Apple, Microsoft, Amazon, blah, 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 Meta, until recently, is going to show massive outperformance relative to other ETFs. Because throughout time, there's always going to be some segment of the market that's going to do better than other segments. I don't know what it's going to be in the future, but that's just how it is. And when you have hindsight, when you look into the past and you find something that massively outperformed, you may think people that bought that were geniuses. When in reality, usually people buy investments for the stupidest reasons. Look at Jeremy Lefebvre, okay? His reasons are why the typical investor buys an investment. I believe there are very few people that actually make sophisticated investment choices. I think they do simple analysis and they pick something because it sounds good or they have some stupid theory in their head. That's what I think. But buying VT mitigates that because you're buying the world at market cap weights, okay? So let's compare these two. QQQ versus VT. Think of QQQ as a large cap US tech ETF. Basically, it's the largest 100 non-financial stocks traded on the NASDAQ exchange. And then you have VT, the total world, which includes the United States. VT is not an international index. It is not. It is a global index. You have the USA and you have international. Does that make sense? People confuse this all the time. They say, oh, I'm going to put VT in my portfolio as an international investment. But it has US stocks. So it's not really an international ETF. It's a global ETF. In the United States, if you look at a globe, you know what? We're going to pull up we'll do that later. If you look at a globe, the US is on the globe. Okay? It's there. So that's that. Okay, so let's compare them. We have QQQ on the left here. Let me see if I can zoom in a little bit. QQ, my blue, blue. Let me make sure I'm sharing my screen. I'm not a clown. Okay, QQQ is on the left. VT, my ET's on the right. What's in QQQ? Apple, Microsoft, Amazon, Nvidia, Alphabet, Google, Tesla, Meta, my Serengeti, Broadcom, Pepsi, blah, 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 blah. The largest 100, I guess 102, because I guess, that's Google is 2 classes of stocks. Why? I don't know. They just do. I'm sure there's a reason. But it's the largest 100 non-financial stocks on the NASDAQ. And then we have VT, 9,348. Okay? What are the top stocks in VT? Wait, why do they have 1% US dollar? What's going on here? Apple, Microsoft. Oh, wow. It's almost like they match. There's some similarities here. But what are the differences? Look at the weightings. 12% Apple, 11% Microsoft, 6% Amazon. The global market cap, Apple is 3% of the global market cap. That is the true rough market cap, as long as the ETF is tracking it well enough. That is the true value of Apple as a percentage of the global market cap. So by buying QQQ, you're making an active decision that I am going to overweight Apple stock by 4 times relative to its actual value assigned to it by the market. And that's why I'm buying it, because I think there's something special about Apple. But here's the thing, ladies and gentlemen. Everybody in the world, all the investment funds, all the geniuses, everybody's looking at Apple. They're all looking at it, okay? And yet you believe Apple should be 4 times overweighted in your portfolio when everybody in the world collectively has said that Apple should be 3% of the global market cap. Why? Why did you make that decision? Because Apple went up a lot. That's why you're doing it. So VT has way more holdings. And if you go down, I mean, it's all U.S. companies at the top, right? Because U.S. companies dominate the global market cap. But as you go down, you get Nestle, Eli Lilly, all the Taiwan Semiconductor. There's a bunch of international stocks in here. Tencent. Why? I think isn't Eli Lilly a U.S. stock? I don't even freaking know. I don't know anything about that company. But if you go down, you can see there's international stocks in there as well. Okay? You get everything. Everything. That's how it is. Because you don't pick a market. You look at the U.S., it's just U.S. at massive overrepresentation. And I truly believe people that buy QQQ are doing it because of past performance. Because they think other people are so dumb that they can't look at past performance as well. Do y'all really think I can't see that QQQ has massively outperformed VT? You really don't think I see that? You think I'm that slow that I can't look at past performance? And we're going to go look at a chart. And then you're going to look at me and say, Strongman, you're insane. Why are you buying VT? And I'm going to come back at you and say, how do you know the future? How do you know? You don't know. What are you making your investment decisions on? What went up more? What am I making my investment decisions on? I don't know. I let the world decide. There's a big difference there, okay? So that's a big difference. U.S. stocks, 100 stocks, massive weighting at the top. And then you have VT, which has every stock in the world, basically. I mean, obviously, it's not going to be perfect, but that's the goal of the ETF, okay? Global on the right, large cap U.S. tech. Now, QQQ is what I like to call a fake index. And I had this debate with Kingdom, right? And he said, oh, you're an index fund investor if you buy QQQ. or a VUVO, whatever he freaking invests in, or a Shada. And I come back to you and I say, the purpose of an index, a true index investor, is to buy a total market index, because an index investor says they don't know the future. That is the essence of index investing. You buy everything because you don't know the future. But what if I create an index of clown stocks? Because you can do that. You can just buy all these stocks at market cap weights or equal weight them or whatever you want. You can create an index out of anything. Anything can be an index. I can make it the poopy fart index. I can make that. Does that make you an index investor if you buy the poopy fart index that has like 4 clown stocks in it? No, it's an index. Sure, you created it, but it's not really, it doesn't embody the essence of what an index fund is. An index fund, you buy everything and you let the active manager sort it out. If you buy a targeted index, you're making active decisions. You're overweighting a certain segment of the market. That's all I'm saying. But people don't seem to understand that. That's fine, okay? So we look at VT my ET, right? It's got a bunch of crap in here, blah, 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 blah. Sector breakdown, okay? Obviously, QQQ was way more heavily weighted towards technology and technology. Why? Because that's a big part of the largest stocks on the NASDAQ, the largest 100 non-financial stocks traded on the NASDAQ. It's a lot of tech companies, where VT is literally the world at market cap weights. These are all the publicly traded stocks and what their sectors are at the relative percentages that they should be, okay? Now let's go down. QQQ, 100% large cap, basically. VT, 78% large cap, 15% mid cap, 4% small, and 0.5% micro cap. Why? Because that's what all the active traders in the world, that's what the market has assigned as those values of all those stocks in the index. Okay? Doesn't mean it's good or bad. That's just how it is. QQQ region breakdown, 100% US. VT, 61% North, Central, and South America. I think it's roughly 60% US. 16% Europe, 15.5% Asia, and 0.1% other. I don't know, bars. It's probably like Africa or something. Country breakdown. QQQ, basically 97% US and a little smattering of other stuff. VT, 55% US and everything else. Do you see the massive difference? Do you see it? 100 large cap tech stocks in the US versus every stock in the world at market cap weights. And like I said, if you look, can you look at this? Is VT a international index? No, it's not. The United States is 55% of VT. Okay? And the people are like, oh, there's a lot of bad countries. Well, define a bad country. Oh, crap. I think define a bad country. Everybody's like, oh, these countries are going to do well and these countries are going to do bad. Yeah, a lot of the times that knowledge is baked into the stock prices. And sometimes when a country does well for a long time, maybe that market could potentially be in a bubble. Or maybe that market is relatively overvalued and will revert back to the mean. I don't know. Maybe that's the case of the United States. I don't know. So let's keep going. What else is in here? Okay, so that's like the basics, okay? Global index versus large cap US tech. Now let's look at the comparison. And you're going to laugh. You're going to be like, see, strong man. You're so stupid. You're so stupid, strong man. Look at the performance difference. If you look at past performance, and that is the main part of your investment thesis, you are a clown. You are a garbage investor. You should not be buying anything other than a global index. Past performance means absolutely nothing when it comes to investing, because investing is about the future. And if you think about it logically, if you looked at past performance, and this is why people don't hate VT. Look at this outlook. Look, QQQ has annihilated VT. Absolutely annihilated VT. But I'm going to show you something else in a second, okay? And people say, I don't get it. I mean, they act like I don't see this. You really you think I don't see this? You think I can't see this? You think I'm insane for not buying the thing that went up more? And I say no, absolutely not. My fundamental belief is that I don't have time to really guess where the market's going to go. And because of that, I buy everything. And past performance is not future performance. You see the disclosure in all the mutual funds and ETFs. Past performance is not indicative of future performance. Whatever. There's a reason that's there. Okay. If you like past performance, go buy Bitcoin. Go buy ARK, bro. Just put all your money in Tesla. Why not? It's past performance. It went up more, bro. Okay, so over the max, VT's been absolutely annihilated. And people say, well, if you invested in QQQ, you would have been rich. Okay, if I would have bought Bitcoin, I would have been rich. If I would have bought Tesla at the perfect time, I would have been rich. I don't care. It doesn't matter. You could say that's hindsight. Hindsight is 2020. I don't know. But what I do know is that past performance is not indicative of future performance. And buying things that went up a lot is one of the worst investment decisions you could ever make. But obviously, you're smarter than me because you're buying stuff that went up more. You're a genius. You are a genius. And I'm an idiot because I don't know. I don't have the research capacity to see this. This doesn't compute in my head. Why am I buying VT? And actually, funny enough, International has outperformed, let's see, VT. So if you go back a year, VT outperformed QQQ. So it's better, bro. See? You go back 6 months. Let's see. VT has done pretty well against QQQ. Sometimes markets go in cycles. That's what I'm saying. And if your time horizon is the last 10 or 14 years, you let that be you. Okay, I'm not going to potentially miss outperformance internationally because I chose to buy U.S. stocks because they went up a lot. That is not good investing. It is not good investing. If you're an active investor, okay, do whatever you want. I don't care. You can buy U.S. stocks, 100% U.S. stocks. But don't sit here and say, U.S. stocks, bro, they're the best because they went up more. I will instantly destroy you if you say something like that because you're wrong. You're a clown, okay? I wonder if I could compare this thing's too complicated to work. Actually, let's put ARK in here. ARK. Let's see. Okay, so ARK over the last 5 years. This is exactly what I'm talking about. So we have QQQ in dark blue. We have VT in light blue, and we have ARK in purple. Look at ARK versus VT. ARK has underperformed VT. But you clowns over the last 5 years. But you clowns, you geniuses, in 2021, right here, you would have laughed at VT. You would have said VT is crap. Look at how ARK has done against VT. And I would have sat here and said, I don't know. Past performance is not indicative of future performance. And look what would have happened. And you don't think that can happen to QQQ? Oh, you're wrong, brother. Well, you know what? You're smarter than me. Buy stuff that goes up. You are a genius, and I'm a moron. Okay? That's my rant. QQQ versus VT. What am I buying? VT. What are you going to buy? Probably what went up more. Strong man, personal long dong. I have QQQ as 20% of my Roth. I'm 25 years old, so is this okay if I'm not touching it until I'm 65? I don't know the future, man. I mean, if I tell you sell it and then it goes up 20,000x, I look like an idiot. But if I tell you don't sell it and then it goes down massively and underperforms GT, you're going to be like, strong man made me lose money. Your decision, okay? You need to do your research. Make your own decision. I like VT. That does not mean you have to buy it. I'm laying out my philosophy. What about the Flat Earth Index? I'm sure that's going to exist one day. How about the World ETF without USA? That's VXUS. That's a true international index. VT is not an international index. When somebody says VT is international, I automatically dismiss them as clowns because they don't know what they're talking about. QQQ will be the best performing ETF for the next 10 years. Worst performing ETF for the next 10 years. I actually agree with that statement. That is entirely possible. Because when you have this massive outperformance and everybody's buying it because it went up a lot, there's something wrong there. I mean, look what happened to Meta. Destroyed. Absolutely destroyed. And Meta was like the king. I think it went over $1 trillion market cap. And then that stock got nuked. That could happen to anything in QQQ. It could happen to Apple, Microsoft. Who freaking knows? You don't know. That's all I'm saying. But they went up more. Yeah, I can't see that. Meta by Beretta. Strongman, is it bad to be in TQQQ instead of QQ? I don't mess with those stupid 3x leverage ETFs. Discount rates. My discount rates. So the Dow is a fake index too. I mean, basically, yeah, it really is. It's like, oh, I'm going to take the largest, 30 stocks, and these 30 stocks, and then we're going to pick them based on these metrics. And I don't even know how they make the freaking index. If it ain't a global index at market cap weights, it's a fake index. Just saying. Think about what index investing is. What is it all about? It's about you not knowing and you buying everything. You buy everything. That is the essence of index fund investing. Because Dow only has 30 stocks. Yeah. I mean, it's an index. But from a philosophical standpoint, no, it's a fake. I mean, of course it's an index. But from a philosophical standpoint, it's not. I just use QQQ to give me more exposure to those companies. Same with VUG, and VOO. I basically use I mean, yeah, there's a lot of overlap there. I'm just saying, but I'm not going to tell you what to do. What about Kevin's pin? Oh, God. VT is not moving. QQQ is going to the moon, bro. People said that about ARK. And VT over 5 years has outperformed ARK. Think about that. That is absolutely hilarious. VT has outperformed the futuristic bro by my stocks, by my course bro ARK. I love it. I love it, baby. I got mainly VTI, some QQQM in my rollover. I mean, at least QQQM has lower expense ratio. If you don't know the future and therefore buy everything, why don't you buy Bitcoin? Because I don't know the future with stocks, but I'm not getting into an asset class that's a fake asset class. And by the way, I have exposure to Bitcoin, really, because I'm sure there's some crypto crap inside of the index, okay? I'm not touching crypto. I don't believe in crypto. But strongman, stocks don't go up massive because they were mispriced. Or they go up massive because God wants me to be rich and have an easy life. Why don't you understand this? Why don't you? God, you're just a hater. He doesn't buy Bitcoin because there's no asset behind it. It's based on how much people trade it. Bitcoin's a scam. Come on. I mean, at this point, does anybody not see it? Why would anybody invest in QQQ? It's only gone up 500% since 2010. Meanwhile, TQQQ has gone up over 5,000%. It's not even close. Yeah, I didn't even think about that, Cole. Good observation. Why? You need to go buy a triple leveraged, large cap U.S. non-financial NASDAQ tech ETF. You people are just crack me up, man. It's like, you think we can't see past performance? You think we can't filter on a mutual fund? It drives me insane that people think that. More money is spent on time looking into ETFs to make a better choice. I feel like any well-diversified, low-cost fund is reasonable. Yeah, I mean, I guess I could get behind that. Strongman, Tesla will grow its revenues by 50% for all eternity, which means the stock will also rise 50% for all eternity. What? You don't get it, bro. See? Only caveat is it's 50% on average. Why don't you understand how it works? Because I'm slow. Damn, Strongman, don't believe in America. 55% of VT is U.S. stocks. That's all. I'm done saying that. I'm done. Why do you put so much of your portfolio if past performance isn't indicative of future performance? What about gold? Gold, greater full theory. Bitcoin, greater full theory. Art, greater full theory. Antiques, greater full theory. Pokemon cards, greater full theory. Stocks, companies produce real goods and services. They make a plant. A car company makes a plant. They make cars. Cars come out of the plant. The company takes their profits and buys more plants. Therefore, more cars get produced. Okay? That's a real tangible good. It produces something that of value to people. What does this crap do? Oh, I'll buy it from you at this price. It's greater full theory. Okay, I don't mess with that stuff. And by the way, trust me, there in some way there is representation of all of this inside the index, a global index. I guarantee you. Soon the entire galaxy will be a Tesla parking lot. And then Elon, yeah, everybody's going to have a Cybertruck, even though the F-Series, F-150s, there's like 620,000 sold in 2022 or something. But Tesla is going to sell double that of the Cybertruck, even though they're not even really in production. I'm Farzad Miss Bussy. Buy my course, bro. I got to end this soon. I'm getting hungry. Let's see. Why doesn't he buy Leafs? Because he doesn't want to own Leafs. That's true. I mean, if I bought bonds, guess what? I would buy. Well, it depends. Because, like, when it comes to bonds, you know, with a bond, it's like a global. You could buy a market cap weighted index of bonds. But when it comes to bonds are there more for. There could be different reasons to have bonds in your portfolio. So when I'm older, I'm going to probably have a decent amount of short-term bonds because I don't want interest rate fluctuations to destroy the value of those bonds in the short term. So when it comes to bonds, I may take a more active role. But when it comes to stock picking, stocks, they're entirely different. You can't really predict where stocks are going to go. You can't really predict where bonds are going to go, but you can mitigate your risk of fluctuations in bonds by investing in certain types of bonds. So when it comes to the total bond, I don't buy the total bond index thing, but when it comes to stocks, I 100% do. Let's see. How is VT doing in relation to gold? I don't care. I don't care if gold goes to 100 gazillion. Let's see. So many comments. I prefer VT. I know the expense ratio more, but outperforms BT by around 4% in all areas. In the past, it has. That's my whole point. I've got VD. Time to get some VT. Let's see. I hold 20% of my wealth in gold. Sorry, Stepbro. I'm ashamed. All right, guys. That's it. QQQ versus VT. Thank you, Cody, for the donation. I actually had my stream open. And I didn't close my stream, and I came back. I'm like, damn, that guy gave me $80 super chat. It's like, all right, I'll make a video about it. VT or VT wax depends on what you want. I mean, there's benefits to both. They're the same thing, basically. One's a mutual fund, one's an ETF. VT wax is the mutual fund. You can set up automatic contributions. Super simple, super easy. Got a slightly higher expense ratio. VT is an ETF. It trades throughout the day, and you have to like actively buy it during the day. Personally, like if I could do it all over again, I would just have VT wax in an IRA and just contribute to it. But whatever, you can always change it too. It's not hard. Contact Vanguard. Let's see. In the future, I've been there and Tesla went to zero. That would be beautiful. Please, someone make a triple leverage VT for Stepbro. Yeah. Strongman, who are these hot girls on the thumbnail? I need this for later. It's Jennifer Lawrence and Amy Schumer. You decide which one you like better, okay? That's your personal preference. All right, guys. Talk to you later. Cheers.